Hello guys, welcome. I have been away for over 2 years on YouTube, and I'm finally back with another banger, as this will be the only market structure video you need to trade synthetic indices in 2026. And I'm here to simplify it for you. For those of you that are struggling with market structure, like you all know the famous quote in the trading industry, structure is king. That statement is 100% true. So I'm here to simplify this concept. So stay with me while we break everything that you need to know about market structure. So what is market structure? Market structure is simply the movement of price, and it can be broken down into three things. Number one, the bullish market. Number two, also have a bearish market. And sometimes we might encounter what we call a ranging market. So now, what are you going to gain from this experience that I will be sharing with you guys? Market structure mastery. And the results you're going to get high strike rate. You also get an increased risk in reward in your trades. So what do I mean by that? I mean your risk to reward will skyrocket. You can be having trades as much as 1 to 10, 1 to 15, 1 to 20, depending on your outlook of the structure. Another thing you will gain is extreme clarity. You are going to be seeing the structures of the market in a whole new dimension. So please stick with me. I'll be running very, very fast. I just want to talk about this topic for just 10 to 15 minutes. So please bear with me as we start the lecture. So number one, you have to build a solid foundation. So depending on what that might mean for you. For me, that means structure, supply and demand, liquidity, entries, and management. These are the 5 components that is needed based on my strategy. So now let's just get started immediately. So we're going to be talking about basic market structure. Basic market structure. Basic market structure. I did not even introduce myself. I am known as the Forex athlete. The Forex athlete. You can find me on Instagram, on Twitter, which is also known as X. And on Telegram, the Forex athlete. Let's make it a little bit bolder. Okay, I'll put it somewhere here. So now, basic market structure. Let's give it a border. Yeah, that's perfect. So like I said, we have the bullish structure, which is also known as an uptrend market. Which I believe every one of you are familiar with this already. The bearish market. And we also have the ranging market. So these are the three types of markets we can encounter while trading the synthetic indices in 2026. So what do we mean by a bullish market? A bullish market comprises of what we call higher highs and higher lows. Higher highs and higher lows. This is all you need to know about the bullish market. This is everything you need to know about the bullish market. So we'll go further by labeling it. We have higher highs. This is our higher low. We have what? Higher highs. Let me just clone it for easy and fast accessibility. This is everything you need to know about the bullish market. What next do we have? We have what? The bearish market. So these are just the two components we need to focus on while trading the synthetic indices in 2026. So here we have what? Lower high. And here we have what? Lower low. So let's make it very fast. Now, this is just the basic theoretical part of the structure. This is not the reality of trading. Whenever we talk about trading, we talk about bullish market, higher highs, higher low. This is the textbook nature. So let me write it out for you. Theory or text book. Textbook. So there we go. But now let us face reality. In reality, what you are going to be experiencing is higher high, higher low, higher high, a low, this is what you are going to be experiencing in reality. So please take note. So same labeling. So now can you see the difference between both the reality and the theoretical version or the textbook version? This is reality. It's just like an examination. When you are in class, they teach you 1+1, but when you enter the exam hall, you would never be given 1+1 = 2. They will give you 4 divided by 2 to give you 2. So that is just the reality of trading in that context. So now let's do the bearish reality. So this is the bearish reality. In this context, we'll have a low, a lower high, a lower low, and high. This is trading for you. So this is what you expect to see while trading the market. This is the actual reality of trading. Lower high. Lower low. So this is the actual reality. And you see it's different from the textbook version, which is the basic lower low and lower highs. But this is the actual reality of how the market moves. So now moving on quickly, this is a downtrending structure, like I said. which you can also call a bearish market. So now we also have what we call break of structures. In simple context, a market breaks a structure after a lower high. In this context, after an higher high is broken, you label it as break of structure. Whenever an higher high is broken, label it as a break of structure. After a break of structure, you expect a pullback. It is that pullback that forms the higher low. Whenever price breaks a structure, it will form a pullback to form an higher low. Now, in this context, the swing high is the highest point that caused the swing low. So this is a swing high. This is a swing high, and this is a swing low. The swing high is the highest point that caused the swing low. This area is called a swing low because it is protected by the previous low. If it broke that low, that means we are now forming a new trend, meaning here will now be called lower low. So please take notes of this. So let's further label it. Remember, after the price breaks an higher high, it is called a break of structure. Same thing goes for a downtrend. Whenever price breaks structure and have your lower low. So we have what? Lower low, lower high, a break. The lower high broke structure, forming a new lower low. After it formed a new lower low, what did I say? Whenever price breaks a structure, it must form a pullback. And it is in that pullback, the lower high would be formed. After the lower high is being formed, the next thing you're expecting is for it to break the previous lower low to form a new lower low. Now you can see after this new lower low was formed, what do we have again? We had a pullback that formed the new and latest lower high. So now how do we know our swing points? The swing point or the swing low in this context is the lowest point that caused the swing high. So this is our swing high. The swing high is the highest point that caused the swing low. So this is the swing high, is the highest point that caused the swing low. You can see price broke structure. So if you want to have your trading range, you take your trading range from the swing high onto the swing low. And this is your trading range. in between these two horizontal lines is your trading range. When price breaks that structure again, where is your new swing? This will be your new swing point. So here, in between these two lines, is your new trading range. So I hope that is clear. So we have what we call strong and weak lows. So let me quickly explain what that simply means. A strong high and a strong low. In this context, this is a strong low, this is a strong low. Why? Because the high failed to do its job, thereby making this high a weak high and making here a strong low, a strong low. For a downtrend, how do we know our strong high and weak lows? The same thing, just the inverse of an uptrend. A low is said to be weak when it fails to take out an high. So in this context, this low is weak, but it failed to break an high. This low is weak because it failed to break this high. This low is weak because it failed to break this high. So these are strong highs. This is a strong high. This is a strong high. And this is also a strong high because they broke structure. They broke structure. So this high will become weak only when price breaks it. And to break it to form a new higher low. So I hope that is clear. We also have what we call trend change. Trend change. Trend. How do you know when the trend has changed? Trend change. You know the trend has changed when your swing high or low has been broken. So in this scenario, price was in an uptrend. All of a sudden, momentum kicked in into the market and broke the most recent strong low to form a new lower low, thereby creating a new lower high, and a new trend has been formed. So how do we go from here into another uptrend? Remember, we have labeled these structures. So still the same labeling: higher low, higher low, higher low, higher high, higher high, higher high. So let me just quickly make it more descriptive. So this is our higher high. Just following the same concept. This is our new lower high, and we also have what? Our lower low. So this was a higher low until price broke structure, which will be represented as what we call a break of structure, BOS. So now, how do we kick into a bullish structure? The previous lower high again must be broken. Now we're officially in an uptrend. So this is the way the market changes trend. Higher high and higher low. We also have what we call a change of character. For now, a change of character is formed when you are expecting a pullback in that swing structure. Change of character is not a trend change. It is simply an indication that price is about to pull back or the price is about to end a pullback. So I have drawn here the two scenarios. This indicates the start of a pullback, and this indicates the end of a pullback. Change of character, and denote it as CH. Change of character. Remember, it just indicates the start of a pullback or the end of a pullback in this context. It is not a trend change. A trend only changes when a swing structure has been broken. And where is our swing structure? This is our swing low. This is our swing high. So the swing low must be broken in this context to form a new bearish trend. So this is everything you need to know about market structure in 2026. Remember, a change of character is not a trend change. It's only the first indication that the market is about to pull back, and also an indication that the pullback may have ended and the market is about to continue in its intended direction following the trend. So let's quickly look at these things we have discussed on the chart. In this scenario, we have an uptrend. And as you can see, we have what? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and a new higher high that has just broken the previous week high. So now let's label it accordingly. So this will be the higher low. This will be the higher low. The higher low. Remember, it is the lowest point. The higher low. So this is the higher highs. Higher low. Higher low. And we have the higher, the latest higher low. So here we have what? Our higher highs. We have our higher highs. Higher highs. So this is everything you need to know about market structure. Now we can also label the breaks of structures. BOS. BOS. Let's clone this. BOS. BOS. And BOS. So this is everything you need to know about market structure. In 2026 as a synthetic trader. In our next class, or whenever I make another YouTube video, I'll be explaining what qualifies as a break of structure, and I'll explain further also about the change of character so that we know when the pullback is about to start and when the pullback is about to finish. Thank you so much for tuning in and watching this video. I hope it was helpful. If you have any question, please let me know in the comment section below. And please remember to subscribe. And if you want me to do any further video on any topic relating to the Forex market, please be my guest and let me know. I will do my best in answering and explaining every topics you have. Thank you so much. God bless you. I remain your host, the Forex athlete.